We finally saw that first crash off of this bubble that's been extended and extended since the 2009 lows, and you know, central banks just saying we'll print endless amounts of money, which they did until they overdid it and finally had to tighten some, okay? Well, that's enough for the markets to get scared because they've been running on nothing but stimulus since 2009, okay? The whole boom from that into the late 2007, I was the one that predicted that the earliest. Baby boom generation, greatest boom in history, okay? It was over after that. 2008 was a serious crash, did look like 1930, the next Great Depression, for good reason, and that's what got the central banks panicking. So they've been printing money wildly ever since. Well, 2022 was important because we had finally got that first crash. I studied all the crashes back a couple hundred years since we've had stock markets, and it basically says a bubble doesn't burst until you get at least a rapid 28% crash, and better on average closer to 40%. Well, we finally got that into June 2022. NASDAQ down 34%. And the fact that that went down farther, down 38% more recently, just confirms that even more. So I've been saying this finally clearly looks like a top. So now your strategy is selling on bounces if you didn't. And I gave my strongest all out, two of them, clear sell signals, all out sell signals for stocks in December, just before the January 4th peak in the S&P, and just after the November 22nd peak in the NASDAQ. So we did warn about this, but there's still people I know that have positions, and you still got friends out there that don't have a clue of what's gonna happen, and family members. So this is the time to get serious, again, about getting out of risk assets to the degree you haven't, getting into those safe haven treasury bonds. It's not gonna be gold. Gold has held up as usual reasonably in the early stages of this, but that's what it did into the first half of 2008, and then it crashed almost 50% with everything else and went crying for mommy. So you gotta get serious about being extremely defensive now. And you got relatives and friends that you know are not taking this seriously, and most people still aren't, you need to warn them now. You better get serious about this, because this is when the rubber meets the road. Again, what have we seen here? That first 34% crash, okay? And then a good rally, okay, perfectly. That's the two wave off the one wave crash. And it didn't go anywhere new highs. Another good sign. Then we see another wave down, two new lows. A great sign. That's the beginning, should be the beginning of the larger and probably most forceful third wave. This is the one that's going to hit people the hardest. And by the time people wake up a few months from now and say, oh, I should have sold, it will be too late. This wave should take us down 55, 60% from the top instead of 34% in the NASDAQ and things like that. You know, everybody out there saying, yeah, deep correction, but the Fed's got it under control, and the Fed, you know, nobody is ever gonna tell you when a crash like this is gonna get worse. All the signs are there that we put in a top. This is not another correction, okay? We should have crashed longer and harder into 2009 and 10 even, but central banks stopped that. Well, they threw everything they had at more than I or anybody would have ever forecasted. They overreacted, and that's precisely why they finally had to tighten again. And they're thinking, since the economy's been strong, that it's because it's strong. No, it's all been stimulus. So you know my view. With the stimulus, not if they just took the stimulus to zero, but no, they are actually tightening. So my view is the economy and stocks are not going to react to this well. Already haven't. Already looks like we're moving this third way. All we need is a real clear break to new lows at this point. Okay, 10,088 is the line in the sand on the NASDAQ. That's just 4 to 5% away. We could be there in a heartbeat. And it looks like we're breaking into that third wave more decisively, which means you got to break into the third wave of the third wave. We are 4 to 5% away from this crash becoming even more obvious than it already should be. And then people really start panicking when they realize, oh my God, yeah, there is no rescue. There is no new high coming, and it only looks like stocks are going lower. I think we're very close to that moment. You just need to be that one step ahead of it and get your friends and relatives to do the same thing as much as you can. We would be lucky at the top of the millennial boom in 2037 to get back to these levels. I don't think we will, because this has been in a bubble era, like in the roaring 20s, where valuations are just much higher, and this has been an everything bubble. Real estate, stocks, commodities, gold, even gold. People say gold is the answer. No, gold bubbled even more than stocks. And commodities have been crashing and will crash more. So I think at best we get back to January 4th levels, 2037. And more important, by then, the U.S. has seen its WAD. We don't have. Births went down after 1990 and continue down. We don't have a generation to follow the millennials yet of any size.
That's right.
And the millennials are like a 5-foot wave compared to the baby boom 10-foot wave. So this next boom won't be as strong, but it will last a long time. We can invest for the long term if you call the long term 2037. I will confirm that 90-some% if we get one more downturn and go a bit lower. I think we have seen the high. I do not think we will see a new high for so long. It's not even worth talking about. I don't think we're going to go back to the highs by the end of this year. I think we're going to see this first wave down into July. We're going to have a bounce for a few months, retrace maybe 30-40% of that at best, get nowhere near the highs. And then when we face another big wave down, I think this is it. They have put this off forever. The truth is we should have had a bigger crash in 2008, should have lasted into 2010, gone much deeper. And then we'd have had a rebound in 2019, and we should have had a second crash, Great Depression crash from 2020 into now, and we're just topping recently. So they pushed this back so far. I think we don't see a new highs in real estate, maybe ever, and in stocks. I think we'd be lucky to get back to these levels in 2037. I would bet that we don't even get back to these levels in my lifetime. Because the S&P has not gone down enough for me to say that was a major long-term top. And if it's not a major long-term top, the markets couldn't go up and make a slight new high later this year. So I do want to see the NASDAQ go down one more time closer to 40, and the S&P can get more than that, down 30-ish stays, and I'll say, yeah, we will not be back up there. Not only this year, but never. The Fed is tightening. How are you going to go to new high when the central banks are tightening? And they're only tightening because they created a sudden surge of inflation by panicking after COVID and printing $5 trillion monetarily and then adding $5 trillion in fiscalus. That's 50% of GDP. We ought to be growing at 20% for that. So they panicked. They've overdone it. So they don't get to stimulate anymore. They cannot. And this inflation is telling them, put on the brakes. And I'm saying this economy is so weak demographically after all this stimulus that just not having new stimulus is enough to throw us into a deeper